Alright, let's talk about something that's been absolutely buzzing in the world of finance. You've probably heard your friends, co-workers, or someone on the internet talking about cryptocurrency. It feels like a modern-day gold rush, where fortunes are being discussed over coffee and on social media feeds. The entire landscape of making money is shifting, and digital assets are at the very center of this massive transformation. People are looking for opportunities outside of the traditional stock market, searching for that next big thing. And right now, a lot of that excitement is pointing toward platforms that offer more than just the usual suspects like Bitcoin, Ethereum. The reason for this excitement is simple opportunity. While the big names in crypto have already seen explosive growth, there's a whole universe of smaller, emerging projects with incredible potential. These are often called altcoins gems, and they represent the frontier of the crypto space. They are looking for a platform that gives them access to these unique opportunities, and that's where KuCoin enters the picture. This is where it gets really interesting. Platforms like KuCoin have become incredibly popular because they are known as the People's Exchange. They list a huge variety of these smaller, promising coins long before other, larger exchanges even consider them. So, what is this KuCoin platform that everyone seems to be talking about? Let's break it down simply. Think of KuCoin as a massive digital marketplace, like Amazon or eBay, but only for crypto. You can buy-sell trade a vast array of coins and tokens. Some exchanges only list the biggest names, but KuCoin offers one of the widest selections anywhere. It's a global hub where people exchange assets 24 hours a day, 7 days a week. KuCoin is attractive to beginners and people hunting new opportunities because it lists new, promising projects. Beyond buying and selling, KuCoin offers extra tools to grow your holdings. It bridges your traditional money, like US dollars, to digital assets. It's your gateway to hundreds of cryptocurrencies, all in one place. The platform is user-friendly, and the interface makes trading straightforward once you learn it. It gives direct access to a fast-paced financial market on desktop or smartphone. Alright, let's get you set up. Creating a KuCoin account is the first real step, and honestly, it's incredibly simple and fast. It's not like opening a traditional bank account with piles of paperwork. You can do this in less time than it takes to brew a pot of coffee. Head over to the official KuCoin website or download their mobile app. Always double-check that you are on the legitimate site, KuCoin.com, to avoid any phishing scams. The internet is full of fakes, so being careful here is your first line of defense. Once you're there, you'll see a big, friendly sign-up button. Go ahead and click it. KuCoin will ask you for either your email address or your phone number to create the account. I recommend using an email you check regularly, and that is secure. After you enter your email, you'll need to create a strong password. Please do not use password 123 or your dog's name. Use uppercase letters. Use lowercase letters. Use numbers. Use symbols. KuCoin will send a verification code to your email to confirm you're real. Once you've verified your email, your basic account is technically created. However, to actually start trading and to increase your security, you need to complete a couple more steps. The most important one is setting up two-factor authentication, 2FA. This adds a critical layer of security. Every time you log in or make a withdrawal, you'll need a code from this app. The final step is completing the Know Your Customer verification, KYC. You'll need to provide some basic personal information and upload a picture of a government-issued ID. Now that your account is set up, let's talk about the basic language of trading. When you first open the trading screen, it might look like a spaceship's control panel, but the core functions are actually very simple. It all boils down to two primary actions, buying and selling. A buy order is exactly what it sounds like. It's an instruction you give the exchange to purchase a cryptocurrency. You're essentially saying, I want to exchange my money, usually a stable coin like USDT, for this other coin. A sell order is the opposite. You're telling the exchange to sell a cryptocurrency you already hold in exchange for another, like converting it back to USDT. Alright, let's get to the strategy. This is a simple, beginner-friendly approach I call the Momentum Rider strategy. Identify a cryptocurrency already showing strong upward momentum and ride that wave for a short-term profit. We are not trying to predict the bottom or the top. Instead, we are jumping onto a train that's already moving in the right direction. This strategy is designed to be executed in about 10 minutes of analysis per day, making it perfect for people who don't have time to stare at charts all day. It's about being precise and decisive. The core principle is confirmation of a trend. We want to see a coin that has gone up in price and also seen a significant increase in trading volume. Think of it like this. Price is what people are willing to pay, but volume is how many people are actually participating. When both price and volume rise together, it's a strong signal of real strength. It's not just a random blip. High volume validates the price action and builds confidence to enter. To find these, use the built-in features on KuCoin. On the main market screen, check the list of top gainers or movers for the last 24 hours. This is our hunting ground. Don't blindly buy the top coin. Look at the top 5 or top 10 gainers and check their 24-hour trading volume. Look for a price increase of at least 10–15% and a substantial volume increase, ideally well above average daily volume. A sharp price rise plus a massive volume spike is our green light. It suggests many traders are piling in, which can keep momentum going short-term. This isn't long-term investing. It's about grabbing a small piece of a move. Get in, take a modest profit of 5–10%, and get out. A disciplined in-and-out approach limits volatility exposure and focuses on quick, consistent gains. We're looking for coins where the initial excitement has attracted enough attention to continue the upward movement, at least temporarily. The beauty of this approach is its simplicity and repeatability. You're not trying to time the perfect entry or exit. You're simply identifying strong momentum, riding it for a reasonable gain, and moving on to the next opportunity. Small, consistent wins compound over time. Let's walk through the exact steps to execute the momentum rider strategy. This is the practical, hands-on part. First, log into your KuCoin account and navigate to the market's spot trading section. Find the list of top gainers for the last 24 hours. Scan and identify a coin that fits our criteria. You're looking for a coin that is up 15% or more. Once you spot one, click on it to open its detailed trading view. The first thing you'll check is the trading volume. Does the 24-hour volume look significantly larger than the days before? A big green volume bar that dwarfs the previous ones is exactly what we want to see. Step 2 is to avoid buying at the absolute peak. A coin that has just shot up 30% in an hour might be due for a quick pullback. We don't want to be their exit liquidity. So, we wait for a small dip or a period of consolidation. Look at the 15-minute chart. Look at the 1-hour chart. After a big green candle, you'll often see a small red candle, or a few smaller candles moving sideways. This is our entry zone. It shows the initial frenzy has calmed, but the upward pressure is still there. We will use a limit order to enter the trade during this slight dip just below the current market price. Step 3 is setting our targets and, most importantly, our safety net. Before you even click the buy button, you need to know your exit plan. For this strategy, we'll set 2 limit sell orders immediately after our buy order is filled. The first one will be our profit target. A realistic goal for this strategy is a 5–10% gain. The second and most critical order is the stop loss. This is an order that automatically sells your position if the price drops, protecting you from significant losses. For the stop loss, a good rule of thumb is to set it at a 3–5% loss from your entry price. KuCoin has specific stop limit or stop market order types. This step is non-negotiable. It's your insurance policy. Once your buy order and your 2 sell orders, profit target and stop loss are in place, you're done. You can walk away. Let's talk about the most important part of any trading strategy. It's not about how much money you can make. It's about how much money you don't lose. Capital preservation is your #1 priority. Protecting your money is more important than chasing risky gains. The fastest way to end your trading career is to lose your entire starting capital on a few bad trades. So we need to be smart. Manage our risk with discipline. It's the one thing that separates amateurs from professionals. The first and most powerful tool for risk management is the stop-loss order we just discussed. I want to emphasize this again. It is that important. A stop-loss is your predetermined exit point on a losing trade. It's you, in a calm state of mind, telling yourself, if the trade goes against me and hits this price, I will accept a small, manageable loss and get out. It prevents a small mistake from turning into a catastrophic one. Emotions like hope can be dangerous. You might hope a losing trade will turn around, only to watch it fall further. A stop loss removes that emotional risk entirely. The second pillar of risk management is position sizing. This means you should never, ever go all in on a single trade. A very common rule for beginners is the 1% rule. Never risk more than 1% of your total trading capital on any single trade. For example, if you have a $1,000 trading account, the most you should be willing to lose on one trade is $10. This doesn't mean you can only buy $10 worth of a coin. It means the distance between your entry price and your stop loss should represent a $10 loss if it gets hit when you're only risking 1% of your capital. No single trade can wipe you out. You could be wrong 10 times in a row and still have 90% of your starting capital left to trade another day. It keeps the stakes low so you can focus on executing your strategy without being paralyzed by fear. It allows you to survive the learning curve. Remember, trading is a marathon, not a sprint. Proper position sizing ensures you'll be around long enough to gain experience and become profitable over time. Let's make this crystal clear with a hypothetical real-world example. Imagine you log into KuCoin on a Tuesday morning with your $1,000 trading account. You open the top gainers list. You see a coin called KuCoin X. Let's call it CCX. It's up 20% in the last 24 hours. It's currently trading at 50 cents. You click on it and look at the chart. You see that the volume for the last 24 hours is 5 times its daily average. This is a strong signal that fits our momentum rider strategy. Instead of chasing the current price of 50 cents, you place a limit buy order for 400 CCX at 48 cents. You're risking a total of about $192 on this trade. Why 400 CCX? Because you've calculated your risk. With your stop loss at 46 cents, your total risk is $8, which is less than 1% of your account. Your buy order gets filled at 48 cents. Immediately, you set your profit target at 52 cents and your stop loss at 46 cents. Hours later, the momentum continued and your profit target was hit. You made $16 on this trade, a successful execution with managed risk. And there you have it, a simple, actionable strategy to get your feet wet in the world of crypto trading on KuCoin. We've covered everything from what KuCoin is, how to set up an account, the basic language of trading, a step-by-step plan you can start using today. The Momentum Rider strategy isn't about getting rich overnight. It's about learning the process, understanding market dynamics, practicing disciplined risk management. It's a foundational approach that teaches you the essential habits of a successful trader from day one. The journey of 1,000 miles begins with a single step, and you've just learned what that first step looks like. This is just the beginning. The crypto market is constantly evolving. The best traders are perpetual students, always learning, always adapting, always refining. Read books, watch videos, follow experienced traders, but always maintain a healthy sense of skepticism. Test everything on a small scale before committing significant capital. There is no magic formula for success, but the closest thing to it is continuous education and disciplined practice. Don't be discouraged by losses. They are an inevitable part of trading. Even the best traders in the world have losing trades. What sets them apart is that they manage those losses effectively and learn from their mistakes. As long as you stick to your risk management rules, the 1% rule, always using a stop loss, you will ensure that no single loss can ever take you out of the game. See every trade, whether it's a win or a loss, as a tuition payment for your education in the markets. Each one provides a valuable lesson, so go ahead and get started. Open that account. Explore the platform, maybe even paper trade your first few setups to build confidence. The world of cryptocurrency offers an incredible opportunity, but it rewards the patient and the prepared. Start small, stay disciplined, and never stop learning. Your trading journey is a marathon, not a sprint, and you now have a map to guide you through the first few miles. The potential is out there, and with the right approach, you are more than capable of navigating it. Good luck, and I'll see you at the finish line.